Welcome to AM Best Audio.
After 2 years of unprofitable but improving results, the U.S. Nonstandard auto insurance segment has notched a slight profit for the first half of 2024, according to a new AM Best report. I'm Lori Chortis for AM Best TV, and we're joined today by AM Best Associate Director David Blades and Associate Analyst Bryan Raber. They're the authors behind the recently issued report on this segment. David and Bryan, so great to see you. Thank you both so much for joining us.
Thanks for having us.
Great to see you, Lori.
David, it's been a challenging run over the past few years for non-standard auto insurers. Can you take us through some of the key findings from the report and discuss some of the pressures facing the segment?
Sure, Lori. So the first thing we did is we looked at long-term results for the non-standard auto market. So we pulled the results for 2014 through 2023, and we looked at the underwriting combined ratio, which is one of the main standards or main metrics looking at underwriting performance. And from that period, from 2014 to 2023, the non-standard auto composite only generated a combined ratio below 100, which is the break-even point, one time in all those years. So over time, the story has been that non-standard auto market, understandably because of just some of the inherent challenges, has been unprofitable, produced unprofitable results. Post-COVID, then, you have the challenge or the headwind of inflationary pressures that impacted body shops. So from the standpoint of claim costs, you had labor costs and just body shop costs in terms of auto physical damage claims. We also have seen trends of more attorneys being represented on more auto claims. So we've seen those things impact both auto physical damage results and the bodily injury results for private passenger auto, and specifically in this market for non-standard auto insurers. What we've seen is that in 2023, we saw the manifestation of initiatives that companies took from the standpoint of addressing rate inadequacy, from the standpoint of being more efficient to address underwriting expense concerns, and just from an underwriting initiative perspective, trying to be better with risk selection and obviously the overall pricing. So we saw that start to take hold in 2023, and I think Bryan will probably talk more about some of the 2024 results. So those are some of the things that we've seen manifest themselves in the non-standard auto market. Again, this market is inherently tougher because you're dealing with just higher risk insured. So you're dealing with very young or very old drivers. You're dealing with new people or immigrants that are new to the country and don't have a driving record. You're dealing with those insurers who haven't maintained auto insurance on a consistent basis, and those who've had multiple driving violations or tickets. So the inherent challenge of that market has been exacerbated by, like I said, some of the trends we've been seeing post-COVID. But we start to see that turn more positively, and I think that's reflected from an AM Best perspective in the overall look at the private passenger auto market, where we recently revised our market segment outlook for the private passenger auto market from negative to stable, reflecting the improvements in rate adequacy, the improvement from a regulatory perspective in terms of companies being able or being more successful in obtaining the rate increases that they've needed, and also from the standpoint of companies being very solid, the companies in this marketplace being very solid from a risk-adjusted capitalization perspective.
So what are some of the factors that helped improve the segment's overall performance?
So I think the main thing has been making strides in addressing rate adequacy. I think, again, from a state-by-state basis, companies have been better at kind of drilling down in the states where they needed to get their rates up and putting as much information into those filings to actually achieve the rate increase that they're looking for. So we've seen that manifest itself in more positively in terms of adequate rates, and it takes a while for that to manifest itself through the results. So although those, that work is gone, companies have taken those steps for a few years, we've started to see them manifest themselves. In addition, like I said before, there have been underwriting initiatives in terms of risk selection, in terms of price, and in terms of utilization of technology, adopting technology, which is something that we've seen private passenger auto insurers really excel at. Adopting technology that's helped them from a standpoint of underwriting efficiency, so being better from an underwriting expense perspective, and we've seen that just bear some fruit also on the claim handling efficiency perspective. So those are some of the things that have actually helped results trend in a more positive direction.
Bryan, what was the impact to the performance results of the non-standard auto composite?
So as David had mentioned, since COVID-19, the non-standard auto composite has been facing some pretty significant challenges. Their underwriting losses have been as large as in the couple hundred of millions of dollars. Their combined ratio has been over 100. Their loss ratios have been in the mid-80s. But when we look at first half 2024 results, we see an underwriting profit. We see a combined ratio below 100. We see loss ratio back in the 70s, which in total is a pretty good sign that these companies have been able to get their losses a little more handled, that prices have increased to a point where they're able to cover the losses, and that things are going to be able to start going in a more positive direction.
The report notes that AM Best's outlook for the personal auto segment recently shifted to positive, with improved rate adequacy having a role. Bryan, what can you tell us about rates and pricing for the non-standard auto segment as of late?
So one of the things we've been seeing, especially in 2023 and 2024, were some pretty massive premium jumps. From 2022 to 2023, we saw an increase in yearly premium of $4 billion. And when we look at increases in 2024, quarterly premium in the first quarter increased by 25%. First half premium increased by 24%. So we're seeing these pretty large jumps in rates, but because they are covering everything, it's a pretty safe to say that we won't see such massive growth happening or continuing into the future, and we'll likely see these prices and these rates start to stabilize.
And David, how has the segment been trending in terms of loss reserve development?
Okay, so historically, loss reserve development for the non-standard auto market has been modestly deficient, meaning, and it's usually been by a point or two maybe that they've had to fortify prior year's reserves on an annual basis. What we did see in 2023 is that deficiency crept up a little bit. So that's something that we'll definitely monitor as we go forward. But from a historical perspective, loss reserve or adverse loss reserve development hasn't been one of the bigger issues that the non-standard auto market has had to face. Like I said, it's been modestly deficient if you look at it over a long period of time. So we'll continue looking at that to make sure we don't see that cropping up while we're seeing other other trends go in the positive direction to make sure that adverse prior year loss reserve development doesn't become, a negative to start, tempering the progress that we've been seeing. But in general, overall, non-standard auto insurers have been pretty good at assessing initially the claims and the magnitude of the claims that they faced and putting away the reserves for them.
David and Bryan, always a pleasure. Thank you both so much for taking the time to speak with us.
Thank you, Lori.
Thanks for having us.
That was AM Best Associate Director David Blades and Associate Analyst Bryan Raber. For AM Best TV, I'm Lori Chortis.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.